Welcome to both of you. Rich, you have been pretty negative for a while, even last fall on tech, have been right about that. Is the tide turning, though? Are we now going into an environment where it's recessionary or slowdown, and you want higher growth stocks?
So, Sarah, it's interesting to watch what's going on today. I don't think that the action you're seeing with NASDAQ up is a recession call. I think it's rather a call that we're going back to 2018. The Fed doesn't have to put the brakes in the economy, and we can all speculate again, right? We should all go back. If you look at what's there, it's the bubble stocks that are leading the charge again today. So, you've mentioned the dollar. It's pretty ironic. The most foreign exposed sector is technology. We all know that the dollar's been strong, but yet technology is leading. We know that technology doesn't tend to, a lot of technology doesn't do well during a recession. So I think, yes, cyclicals are underperforming, but again, you're getting this notion that it's either got to be cyclicals or growth. Nobody's talking about defensives, which is really the group that works the best if you were worried that there was going to be a recession.
Utilities, which one do you like the best? Utilities, staples, healthcare?
I would say, yes, staples would be number one, right? No matter what goes on, we all still eat. Number two would be healthcare. Number three would be utilities. They're not performing very well today. It's really the bubble stocks that are leading the charge.
Jim, do you agree, or do you think it's time for a rethink of tech, given a lot of the bad news has already been factored in, and you see it in some of the reactions here we've gotten early to earnings and numbers?
Yeah, I just recently turned positive again with growth in tech in general, Sarah. I think we're going to avoid recession. I think this is more of a mid-cycle slowdown that we're experiencing. And the key here is in order for the market to rally, it seems likely to me the market has to get an inkling here or a feeling that the Fed is about done raising the funds rate. And I think we're getting closer to that than we think. The Fed, takes its messages from the economy and the bond market, and inflation is saying the Fed needs to wind it up. Real growth is saying the Fed needs to maybe take a pause. And the bond market, anything from 2 years to 30 years, just gave a 60 basis point rate cut, suggesting that bond vigilantes thinks the Fed has also done enough. So I could see another 50 basis point rise, maybe 75, but we could be done at that for a while. And if that's the case, the market sniffs that out, I think we could have an early cycle stock run. You get back to early cycle growth stocks, some early cycle cyclicals, and you dump things like the defensive stocks that Rich is talking about, which have really done well this year. I think their relative values are pretty high. I'd start switching away from them. If you've been there, like Rich has, that's been great. And I'd pat myself on the back and take some profits.
Wow. He went completely the other way as you, Rich. Why do you disagree?
Well, I would say, Sarah, I think we're too focused on an economic recession. I love Jim. Jim and I have known each other for a bazillion years, and we're great friends and everything. But, as many a senator says, my good friend from Minnesota, I have to disagree with him on. And I think, look.
Why not? What if we do manage to escape? What if we do manage to avoid a recession and there's been enough pain that the Fed takes a pause?
So I think what people are missing, though, is that it's going to be that it's pretty much baked in. We're going to see a profits recession, not an economic recession, but a profits recession as we head towards the end of 22 into 23. I think that's pretty inevitable, and I don't think we're going to skirt that. I think it's going to be very difficult to skirt that profits recession. But look, if we do and everything's fine and inflation really does go away, and then it's 2018 all over again. And I agree with Jim that you'd want to be in tech. I just don't think we're going back to 2018. I think the world has changed, and portfolio has been very slow to change. That if we do a mild recession, inflation is not going to go away. We need something that's really going to stymie demand so that we really kill inflation. If we don't, it's just going to be an iterative process. Every time the economy comes back, you're going to see a little more inflation, a little more inflation, a little more inflation. I think that's a very different world than what people are used to.